All right, welcome to another backtesting session where I'm asking the question, is it worth trading January? Now, it's notorious in the futures market that the month of January is lower volume. But what does that mean? Like, is there still profitable trading to be had? Or is it better to sit on your hands and preserve your capital and put your effort elsewhere? And that's ultimately what I'm looking at for myself. And one of my mentors, his theory was to, if you're going to trade January, basically trade on an eval account. Don't touch your funded accounts or live funds. And I'm putting that theory to the test, seeing what I think. Now, I've traded one January before and it was dicey. So I wanted to go dive in and find out more of what Januaries are like, if there's typical patterns or anything that we can kind of discern from trading a number of different years worths of Januaries. So kind of taking a break from my year-long 2025 back test, and I'll show you kind of where I'm at. So I'm doing starting off with the first week of every January for the last 4 years. We did 2024, first week of January, we down 1R. I did the first week of 2023, January, and I'm at break even, one trade break even. And so here I'm going to do the first week of 2022. Now, I'm using TradeZella for back testing. I love it. I've used some of the other platforms. It's pretty much as robust as the dedicated backtesting platforms like FX Replay. But what TradeZella does that those don't do is it's a live trade journaling software. So obviously all of my live trading data gets fed into TradeZella, makes it super easy to collect data about your trades, understand why your losers are your losers, understand when you are most likely to be profitable. Super helpful software. And bang for the buck, it costs the same as backtesting software. So links below if you're interested in that. Also below, if you want to join my free trading Discord, you can join me and like-minded ICT traders as we're, making our paths forward in this industry, and ask me questions, come hang out. So the link below to that free Discord. And if you're watching this video in real time in the next day or two, Apex Trader Funding is having one of their 90% off sales, huge discount, link below as well. So let's get into it. All right, so we're doing, just to refresh my memory, we're gonna do the first week of January 2022, and I'll open up the economic calendar, make sure I'm on the right year, 2022, because I keep switching years, which is kind of throwing me for a little bit of a loop, so I gotta make sure to slow down and double check. So we're good there. The Monday's the banking holiday, so that's a day the markets aren't open, we can't trade. But going forward, the most important thing is non-farm Friday. Happens the first week of January. Non-farm week is dicey anyways on a regular month, and it's probably one of the weeks we want to maintain lower risk, be more conservative. And on a non-farm week, Monday and Tuesday are our highest probability days. In this case, Monday's a banking holiday, so that's no trade. So we'll be looking at Tuesday, Wednesday for our higher probability days. We'll look at Thursday AM session and be very selective if we're going to do anything. So really the big thing to note for this first day trading is Tuesday, we have 10 a.m. ISM and JOLTS, which can make some nice movement, but isn't something to be overly worried about. So let's dive into the charts. Let's look at the weekly, see where everything's at. Here is NQ, MNQ. I'm trading MNQ just because I know I probably should be doing NQ, given the size that I'm going to be trading on these rounds of back testing, but just kind of ended up that way. So everything's at nearly all-time highs. MNQ, we have an all-time high above. ES took, didn't take these equal all-time highs, still has an all-time high up here. Same thing with YM. Still isn't quite at its all-time high. So all-time high territory. And what we do in all-time high territory is you pretty much just long. You don't start shorting until you get some reasonable confirmation of sell-side delivery, at least a 4-hour change in state of delivery, likely a daily change in state of delivery before you're going to be more short biased. So looking at the daily here, we can kind of see, looks like this November and December, we can see a bit of a consolidation here. I would consider the whole thing a consolidation. But we took the all-time high. And you can even see, like here, you take all-time highs. Look how the candles over the next, whether these are daily candles, 1, 2, 3, 4, 5, 6, 7, 8, 9 days past the all-time high, just push. So you don't short all-time highs. And then after that nice push, looks like we came in for an internal retracement. We took external liquidity. So internal to external, taking this all-time high. And then after that, it looks like December just slowed down, came in for more internal liquidity. Consolidated, took this previous low, took this previous high. So I don't know. I'm seeing this as lower probability, but I'm going to run with a bullish bias, assuming that this stop hunt right here, and we had a daily change in state of delivery right here. So you can see these series of daily candles close over that daily down close candle. So I'm assuming that the drawn liquidity is all-time highs for now. So we'll maintain a bullish bias on this. Looking here at the 4-hour chart, the 2 a.m. candle. Let's I guess we aren't quite on the right time. So it's Monday at, we need to get to Tuesday morning, Tuesday. So there's the New York session, or the Asia session on Monday night. So this is the New Year open right in here. So yeah, let's get to the, there's the 9 o'clock hour. Put that there for now, and we'll just go forward. See what London does. That puts us at 7, I think. 8 o'clock. Now we'll go down to the 15-minute chart. Okay. Go forward maybe one candle. Cool. It puts us at 9 o'clock. 9:15. All right. So now all right, so now we can find the 2 a.m. candle. That's the candle I wanted to see. 22. So the 2 a.m. candle right here. It looks like it traded down into this volume imbalance right there, pushed up, closed above this candle. And then the 6 a.m. candle looks like it swept this high, but not this high. And it's pushing down quite far. If it's bullish, we don't really want to see it go too far past equilibrium, the 50% of that previous candle. So it could. I'm a little mixed. I'm not totally convinced bullish delivery here. There's this fair value gap. It might want to come down in this gap first before continuing. Let's look at ES and YM and see what they're doing. So at the moment, ES is doing a better job of respecting that 2 a.m. candles 50% level. YM, on the other hand, is not correlated and just pushing higher. So YM is the strongest. ES is the middle asset, and NQ is the weakest asset. So kind of be curious to see what we got going on at the open. Zooming into the 1-hour chart. Oh, on the 4-hour, I wanted to see something. I wanted to see if this high right here was taken. So yeah, we do have bearish SMT. This high right here was taken on ES and YM. So bearish SMT, but we're in bullish price delivery. So I would more likely expect a bearish SMT to fail. And it doesn't have a double SMT. So there's no consecutive candle SMT stacked on that single SMT. So yeah. I'm imagining NQ might trade down a little further before following suit. So let's go to the 15-minute chart. So yeah, generally more bullish bias here. A little bit more of a consolidation on the 15-minute. Looks like London took Asia's high and then almost took Asia's low. So we have some, equal lows right here that are looking a little suspect. Let's mark the midnight open right there. So price is currently consolidating around the midnight open. And news-wise, we had a 10 o'clock. Yeah, 10 o'clock. So let's get that on marked on here. 11, 10, red folder. All right, zooming in on the 1 minute. All right, so, oh, shoot. I didn't have 9:30 marked. So I just kept clicking, which is actually okay, I guess, because it didn't do anything. So 9:30 is just distributing towards sell side, taking those equal lows. Let's see what happens. Kind of just a little bit of consolidation. Lower time frame seek and destroy for the open prior to the red folder. Price really isn't breaking the, oh, there we go. So broke this range. Oof. It might make a tough decision here in a second. Maybe not. You'll see. I'd like it to push down. All right, so here's that red folder. Pushing it further down. So I want to see it keep going down. We can see these consolidation phases. I don't want to see it go up out of this consolidation phase. So as suspected, NQ was coming for more sell side being liquidity down here. All right, so we got 1020. Let's see where everything is at. Are we in that 4-hour fair value gap? We are way below that 4-hour fair value gap. Let's see what ES is also coming down too. And YM is so completely decoupled. YM's pushing higher. So there was no trade on YM either. So let's look at the 1-hour chart, maybe 15-minute chart. Daily chart, kind of zooming out again. Probably is wanting to come for these fair value gaps all the way down in here. Making sure I'm not missing anything. So we do have this hourly fair value gap right here. We do have some relative equal lows right there. It just swept. Let's see here. So we are making some bullish SMT. We just swept equal lows. There is no fair value gap. So I guess the question is this worth a shot? I don't really like it when the markets are decoupled. It could be that NQ is going to start catching up. I'm longing towards 12 a.m., so that's a good thing. But we're losing levels, so I don't like that it lost that fair value gap. But we have swept equal lows. We have these fair value gaps. We have semi-relative equal highs right up in here. So that's a pro for going long here. So it could be worth a shot. Although I'm actually seeing it's a pretty small inversion now that I look at that. So what we can see here, see how small that inversion is? I think I'm going to let it go. Happy I did. Just consolidating. And would have been a loser. So there's that. I'm going to, I guess that doesn't fully meet my requirements. It's too small of an inversion. So I'm not even going to consider tracking it for a trade I hesitated on. What I mean by that is if there's trades I hesitate on, I document them and I determine were they winners or losers. And I'm noticing so far that 45% of the trades I don't take because I'm hesitant were winners. And that is actually a statistic that's reasonable. I mean, that's profitable at 3-to-1. So, and we can see the winners have definitely started adding up lately. So there was a stretch where like every single trade I was hesitant on, look at this stretch, was way better off being conservative trading. And now that it's shifting a little bit, getting a number more winners in here, kind of showing I'm better being a little more liberal with my setups and not worrying so much. But that was an instance where I was right. So got some nice distribution towards sell side. Oh, there was a short here I didn't even see possibly. No short. At least not for me. There was a 5-minute. So here's a 5-minute gap. And I don't have a 5-minute model. So here's the 5-minute gap it traded into, created an inversion out of that. Was there any SMT? So there was SMT, but I do 15-minute gaps for a continuation. Maybe I should start checking 5 minutes. All right, so really probably not going to be anything right here. Okay, we've got some more distribution towards sell side. At this point, I'm leaning more bearish anyways. It's delivered so far down that I'm not sure there's any levels down in here to long. So it's just selling off. And I guess with this short, just taking those equal lows, I probably wouldn't have wanted it anyways. And coming into the 11 o'clock hour, just selling off. And when it starts to do this, like it just gets leg after leg of sell side delivery, you don't long this, or you don't oppose this. If it's bullish, you don't try to short it when it looks like this. So at the moment, I'm pretty much just clicking forward. So I like, okay, so it consolidated. If it consolidated and stop hunched that, I might be interested in a long. If it was at a certain level. Let's look out, zoom out a little bit. So we tapped into this. Okay, so here's a 4-hour, significant 4-hour gap. There's levels here, another 4-hour gap. On the daily, we probably have some levels too. So there's some significant levels down in here. What's ES is indecisive at the moment. I'm going to adjust my mouse pointer. Makes it go faster, my mouse scroller. And YM is just ripping, so they're still decoupled. So NQ is at a level where we might start to expect a reaction. That's a sketchy looking inversion. Okay, so we're coming up to 12 o'clock, which is when I'm done trading for the AM session. Let's look at the PM while we're here. So here's 1:30 p.m. So let's fast forward through lunch. There's 1 o'clock. And let's look at the low and the high of the lunch hour, roughly that. So we got some relative equal lows down in here. Price, okay, there we go. Nice sell side stop hunt. Just more sideways. 2 o'clock hour. You know, what we typically would like to see is there's days like this where it just sells off, but typically, you know, the morning short traders are in profit. And so what I like to see is price come up, take out some of those shorts before continuing. But it looks like it's just going to be heavy and just delivering sell side. Look at all this trend line liquidity through here for later. But it's almost 2:30. And 2:30 is kind of when we can expect some means of a reversal. I got my face on the screen. Let me remove my webcam, get it out of the way. There we go. So here was a 2-minute right there. There was no 1 minute. So I bet that was it. I missed it. Kind of just floating. So here was the 2-minute inversion, closed above on the 2 o'clock hour. So I might have missed it because I didn't change to the 2-minute till later over somewhere. I don't remember, but you know, my stop loss would typically be right there. So I would have been stopped out. And I'm noticing that with January, the retracements can be much deeper. So there was one, but let's even check this out. Was there any SMT? So there was 1 hour, well, maybe a 15-minute, hard to see on this chart. So there was a 15-minute SMT. So that was a valid 2-minute trade, but I just didn't see it soon enough. So that's the end of the day. So there's one setup. Let's look here. So that wouldn't have yielded 3R. That would have been a break-even trade. And I don't think there was any. There was this 5-minute trade, which I don't have a 5-minute model. And 930 yielded nothing for me. So yeah, so let's document this day real quick. All right, so I'm gonna say, I don't know if there was no take model. I'm gonna say I didn't take the model. So the PM and IFVG other notes delivery was heavy. Sell side delivery. Delivery was bearish. AM. Uh, um, just making a note for needed a wider stop loss. I feel like I've been seeing that a lot lately. All right, so I'm gonna change a couple of things. Other notes, I'm kind of just wanting to like mentally recap the price action. The lower time frame was PA okay, few models. All right, so there's that. All right, let's keep going. So we're going to move those drawings. We'll go to the start of the next session. Zoom out to see what's going on. So the dailies retracing on NQ back down into equilibrium of this range. So it swept these highs, relative equal highs. We shall see. I mean, it very well could be turning bearish, but I can't be bearish quite yet. Let's look at ES. ES is just consolidating on the daily, up at all-time highs. YM is making new all-time highs. So everything is completely decoupled. They're all doing different things. So for me, I feel here's a, we have 4-hour is turning bearish. So I could see shorting from this gap if price trades up into this gap coming back down. But what I've noticed is it tends to just fall. Not really giving these kinds of retracements. So we shall see. I could take a short up in here. I could take a long down in here. And that's premium and discount, if you know what that is. Like you can take a range, you can divide it into half. This is premium, this is discount. We shorten premium down to discount. We long and discount up to premium. All right, keep going. So here on the 15-minute chart. So London took Asia's low and high, basically. So here's 12 a.m. Here on the 15-minute chart, let's find 9:30. There's 9:30. And today's Wednesday, there's 8:15 ADP non-farm, already happened, 2 p.m. FOMC meeting minutes. All right. Let's go. So here's that 8:15 red folder, did a sell side stop hunt, had these relative equal lows. Kind of just looking around. So they have these equal highs right up in there. We have this high probability. And we have the previous day low, which I'm imagining is the draw on liquidity. Where'd it go? There it is. We shall see. What time is it? 9 o'clock. All right, 9:30 coming up. Other thing I'm noticing is 9:30 kind of creates this breaker order block inversion kind of setup and just kind of tends to rip. So I've been seeing that a lot the first week of January. Let's see what it does. Ooh, brutal. Ooh, brutal. So it would have stopped out all of these mofos, shortened this with what I just saw, and then would have sunk for the draw on liquidity. So no entry model for me. Let's keep going. That's a tough call. So look at that sell side stop hunt right there. Big time SMT. It took the previous day's low. Here's a daily fair value gap. Nothing there. I don't feel like it's wants sell side with this previous week's close. But we have a daily fair value gap. We have a tailless candle on the daily. We have a volume imbalance up in here. So there's inefficiencies right through here. 4 hour. Here's a 4 hour fair value gap. We aren't to the 50%, so I don't think I'm interested in a long there. Otherwise, it meets a lot of the criteria. SMT, stop hunt, 4 hour fair value gap, and it didn't tap into this daily fair value gap either. This is a tough one. So we have these higher time frame levels right there. Then what I love about back testing is like you have to make quick decisions live trading, right? Here, I can slow down. I can really think about things, pay attention to the details. Like right here, we have a tailless candle. And I don't really want to see that. We have this fair value gap. We do have some beautiful equal highs right there. There, some more. And then up in here. So is it worth a shot? Maybe so. Oh, it's not tail. Let's look at that. It does have a tail, but we do have a volume imbalance. That was tapped into. All right, so is it in the macro? 940 on the dot. We can give it a shot probably. And give it a little bit more room. And I'll just go break even a little earlier. So there's possibility for 3R here. We shall see. That's a bigger stop loss than I would typically like to run. Maybe we do something like that. Although my rule is the bottom of the inversion, but this is a little different. So I'm just going to do that. Call it good. See what happens. So IFV. Oops. So here we have an IFVG. We have a daily stop hunt. We have a 4-hour and a daily fair value gap. Daily liquidity. We have SMT. We have high probability targets. We're in a macro, which are equals and session and 12 a.m. It is just trying to think about the order flow. So it's against all the order flow. The 4-hour, it's against that. It's against order flow, but it's where I might expect to see a reversal. So against order flow at daily reversal zone. So this is maybe where a different model would be better than mine for this, because if you waited for more confirmation, like I'm using a 1-minute model to confirm a reversal at a daily zone, right? And so if we look on the 5-minute, so the 5-minute formed a C2 model, and a 15-minute looks like it's forming a C2 model. So we shall see. We shall see. This is where I should have been doing the minis and not the micros. All right, let's find out. Oh, coming for me. Okay. I'm going to move my stop up. I don't like that price action. All right, so we hit 1R. I'm going break even. Do we have any targets up there? We do. Will it get there? Don't know. Doesn't look like it. It's just kind of, that's just ugly. Wow. All right, tapped out of break even. All right. So I was right with my stop loss, wanting to keep it below the IFVG because it did come down. And look at how price action changed pretty much as soon as I entered. You can see how the candles are starting to get all wicky and looking no good. So let's see what happens here. Looks like there was a short, which would have been more in alignment with order flow, right? But I was already in a long. So I would have just gotten 3R out of that short. But the hard part about shorting is the draw on liquidity was already met, the daily low. So we shall see. Was there any SMT? And I'm taking the time to do this because I want to know, like, how many good trades were there? Winning trades. That's hard to tell. Zoom out a little bit. So there was SMT. And it was in the macro. So this was a valid trade. Valid short. Or let me double check that. So there's no 1 hour level. There is a 15-minute right there. So yes, that is a valid short. All right. All right, price is just consolidating around that previous daily low, coming into the 12 o'clock hour where I'm done. All right, so all right, let's check out the PM session. The PM sessions have not really been offering much, I've noticed, other than that yesterday. So the red folder's at 2. Oh, wow, look at the lunch just dropped, 12:30. 1 o'clock, 1:15. Oh, I bet I missed it. And I keep doing that too. Maybe not. There's no model for me here. So here's our lunch session right there. We have the FOMC meeting minutes coming up at 2. Came into something, saw some reaction. I don't have a model down in there, so it doesn't really matter. Let's see what happens. A little bit of a delayed reaction. And I feel like this is similar to other periods in time that I've observed where it's bearish, but I get very few short opportunities with my model. And if I get the long opportunities, you either get stomped on or they get tapped out of break even. So 250, and there's nothing here for me. 3 o'clock. All right, 3:30. Cool, good enough. So what do we have today? One long break even. There was one missed short. PA still wasn't great. So let's make notes of that. So we have, I think blue is break even. It was a 1050 short. I was in my long. All right, other notes. PA was just PA not great. Heavy bear. Heavy bear, no shorts. So we can see the patterns starting to show. And at the end of the week, we'll be able to kind of look at the themes here. So it'll be interesting to see. And also comparing this now to the other 3 January's first weeks. So we'll check that out in a little bit. Let's keep going, I guess. Remove these drawings. Let's go to the next session and zoom out to the daily. All right, so look at this coming for these lows. The daily change in state of delivery was a suggestion for more bullish price delivery. But what happened is we're seeing the 50% of this range being disrespected. More specifically than the discount, this fair value gap right here. So it closed below this gap, and that to me suggests it wants to take that low. ES rolled over after consolidating, and YM had a daily change in state of delivery after taking this all-time high. So we can see close below this bearish candle, close below the open of that bullish candle. So feels pretty bearish to me, even though it's all-time highs. Starting to get a lot of signals to say shorts are in favor. Obviously, the price action itself is lending to that. So we have this 2 a.m. candle. Kind of came back up into this fair value gap. And then the 6 a.m. candle opened up, took this high, and left this gap here. So let's see here. The 1 hour, we're resisting this gap right here. I don't know why it's always purple. Template. blue, no border, and a midline. Thank you very much. Sure, fine enough. Maybe not. That's better. Just curious to see if it remembers my settings, because it just always defaults to purple, even when I switch my templates. Anyways, lost focus there. Squirrel! So the 1 hour just took these equal highs. The 1 hour is kind of consolidating. Here on the 15-minute. Just more consolidation. Looks like London didn't do anything. So I'm assuming that we'll see some kind of manipulation for distribution. There's 12 a.m. And what day is this? Thursday. So this is a low probability day. We have 10 a.m. red folder. It's the day before non-farm. All right. So we can just kind of see. Nope, it still wants the purple box apparently. We have this accumulation zone. Look at these candles. Oh, I'm on YM. Oh, bummer. Okie dokie. Try this again. All right, so look at Asia's range on NQ. So that's 700 ticks. That's a significant expansion. And that can indicate lower probability New York AM sessions. Can. Doesn't mean it does. It's just, it can. We have a 10 a.m. red folder. So London did nothing, which is nice, but overall doesn't look too enticing of price action. So let's see here. Here's the midnight candle. All right, try this again on the right chart. Okay. Zoom into the 1 minute. What do we see? Do have some nice little equal highs right here. So here's an inversion after sweeping those equal highs, but I never take trades in the 920 to 930 time period because 930 can just stomp on you. So it swept this low, closed above that inversion in this volume imbalance, but I don't think there's anything in here for me. So the 15-minute looks like a barcode. That's when I know I'm not going to do anything. So let's see if price moves away. So it looks like that long did play out. And that would have just been luck in my opinion. I mean, look how many times this gap got traded into. That's just luck. That's okay. We'll look for a short maybe. Time is it? 42. All right, red folder incoming. Not a big mover. So the short never really came to fruition. There was this inversion for me. That's too small. There's a larger inversion, but it had all this consolidation in it, and I don't take it when it looks like this. It's not V-shaped. Additionally, that was right before the red folder, so I didn't want to be in before the red folder. I'm not interested in longs. This is going to be one of those probably sessions where we don't do anything. See, no large inversions. There is a breaker. Closes above right there. I almost forget that I trade breakers too. Okay. So just one-sided delivery coming up onto 12 o'clock. And I would be done for the day. So let's we'll go to the start of the next session. I want to see the delivery for the whole day. So pretty much just sideways. So this was seek and destroy. Well, like big seek and destroy. So not lower time frame, medium time frame seek and destroy. So low, high, low. What's the 15-minute look like? And part of this, like I'm studying, what's this price action look like? So Thursday, look at that. Just ugly. Nothing's moving. So did I miss anything? Really? I mean, this was so ugly that I don't even want to count it for a trade. I'd be hesitant to take. Because I don't trade poor price action. That's gambling. That's like how I stay out of trouble. I'm gonna call this day no model. So poor PA, medium time frame just consolidated. So that leaves one more day to see what happens. So let's zoom out, I guess. All right, so the daily is still heading lower. There is this daily fair value gap. I'm not so this didn't close below, so I'm not expecting that to be a breakaway gap. It could want to come back into this gap before taking this low here. We do have this drawn liquidity, and then ultimately this drawn liquidity. And we have that 50% of that previous candle. So the 4-hour 2 a.m. candle did what? And kind of stop hunted this candle, but closed back in. It formed a C2. And then this one took that low, so that failed. That C2 reversal failed. We have this 4-hour gap, which was traded into. Looking at ES and YM. No clear SMT down in here. The 1 hour is accumulating. And on the 15-minute, 12 a.m. open, 9:30, and Friday. So non-farm was 8:30 with no 10 a.m. news. And what we can see, it took some, left some near equal highs. So that's interesting. We have news high as well. And the news low is taken. So I have very little expectations for this day. But we'll click through. And part of it is like, I click through to see what it looks like and what I shouldn't be trading. I've known ICT traders that they kind of look at there's just so many reasons not to trade as an ICT trader. You know, if the wind's blowing to the south, don't trade. And I think some of it's valid, but I think some of it isn't valid. The litmus test is price moving and distributing well? That's all. And it's not. This is a low probability week. This is non-farm. It's the first week of January. And we can just read these candles and say they are not moving nicely. And that's, I think, a really important underestimated skill that traders don't put enough emphasis on, is like knowing when price doesn't look good. You know, I can zoom out to the 1 hour and I'm like, this don't look good. I am probably not going to take a trade here. You know, maybe if it comes down and sweeps something, and that's what'll happen is like, so I don't walk away because maybe it comes down, sweeps this low and starts looking good. You know, maybe it does. Maybe it just looks like crap. So it took the news high, it took these equal highs, and it's consolidating. All right, drawn liquidity was met with no model to get down there. There's a breaker. And I guess there's no, well, for me, there's no inversion and a breaker. I trade the inversion plus a breaker. So I feel like the breakers are happening, but the inversions are not. Probably because of low volume. Oh, look at this. So here's an inversion right above my drawn liquidity. That would be tough to take. More accurately, I guess it's right there. Watch, it runs. Oh, consolidation. Still might be a 3R winner. I probably would have been tapped out of break even. Ooh, brutal. So let's look at that. So that would have been a break even for me, even if I would have done it. So go to the 15-minute chart. Fast forward through lunch. Lunch is basically here to here. Call it there. Just sideways around the previous day low. Two o'clock hour, nothing. Nothing either way I see that I like. So 230. And it did this the other day. Remember I clicked past 230 too quickly? There is this inversion here. It's not pretty. And it gives 3R. Is there a... There's no 15-minute level. I wouldn't have trusted. There's nothing there for me. So no model. No model. So this gave, there's a 3R short right there. Closed in the gap. Looking for SMT. So I'm checking out, did I miss anything? So that did have bearish SMT. That's 12 o'clock when I'm done trading. Although I'm guessing I would have gotten a break even on this. So it closed below below that gap. Maybe I would have done something like this and I probably would have been break even. So no model for me. So let's make notes here and review and see what happens. So no model yesterday. I don't know what I call this. Like there was a model, but it was like it didn't win. So 12 o'clock short BE missed. So I missed a break even trade. What would have won? Nothing. Delivery for today was bearish and sideways. So more bearish sideways. More bearish AM, side PM. PA poor. So themes. So let's look at this. Let's move these 9 drawings. Let's look at the 4-hour chart. And when did we start? Two o'clock. So here's when we started. So the higher time frame distributed. But we had few short setups. So the higher time frame was bearish. Some longs that were low probability. Few IFVGs. Overall, better sitting on your hands. And this is where it's a bit of a bummer, like, maybe bummer isn't quite the way to put it. Hang on, I don't know. Text, color, red. Like in these kind of weeks, if you don't get the right trades, you're not profitable. There were only, so I missed, well, that short would have been break even. I missed the one long, and hopefully I would have had discernment to use a wider than I was thinking stop loss. Few IFVGs. I'm actually going to make another note here. Stop loss likely needs to be, and targets often 1 to 2 are hit. So, but my system is based off of 3R. So that's important. And what's interesting, like if we can compare, so let's look at this backtesting session. One trade, break even on the week. And so the themes here are starting to show themselves. So that was 2022, right? Bearish, not great PA. So I'm going to say lower time frame PA, not cleanest, not the worst, but not clean. But if we look at 2023, not many clean setups, not many order flow aligned setups, higher time frames consolidating, better off not trading. And then if we look at the first week of January of 24, higher time frame was distributing only a few setups, lower quality PA on lower time frame, non-farm, seek and destroy, better off sitting on hands. So here are 3 Januaries where the first week I'm ultimately better sitting on my hands. So, 3 is not a lot of data, 3 weeks, 3 first weeks of January, but it is a pattern. So maybe I'll do one more. Maybe I'll do the first week of 2025 since I didn't do that in my other backtesting sessions. And maybe I'll call that the last January. And ultimately what I'm seeing here is like, I don't really see a reason to live trade the first week of January. So that's super interesting and that's super valuable because capital preservation, knowing when to trade and knowing when not to trade, they're both critical. And people just want to take trades and they want to force it, I feel like. And I get it. Like, I totally get it. Part of my wanting to master this craft is my patience. And I have something here. Let me see if I can find it super quick. Well, that printed version, I don't know where let me see if I can find this amazing video And the notes are Jesse Livermore. Let me find it. I'll show you. If you're still here, you deserve to see this. There we go. So this video, if you want to screenshot this, the market doesn't pay you for being active. It pays you for being right. And being right often means you got to do nothing. Everyone wants to take a trade, wants action, but the market isn't a slot machine. Not trading is the hardest part. You don't get paid for being early. You don't get paid for being late. You get paid when the perfect setup and patience. You get paid when you got the perfect setup and the patience to wait for it. Like, this is just amazing, right? It's not the constant trading that makes the money. It's the waiting for the perfect setup to appear that does. And the market has a way of punishing impatience. If you chase, you pay. If you guess, you pay. If you force, you pay. If you sit on your hands until the picture becomes perfectly clear, the odds tilt in your favor. Good moves don't come every hour, and sometimes not every day. They come when conditions are ripe. And we're seeing that conditions are not ripe in January. Setups are like a train schedule. If you miss one, just wait. Another will come down the tracks. But maybe January is not a very busy month. Waiting is work, waiting is discipline, waiting is a trader's true craft. The market will always give you chances, but not all chances are created equal. Some are just noise. If you chase the noise, you won't be ready for the real trade. The markets will tempt you with half-formed patterns, maybes, and almosts, but you've got to resist. Your job isn't to play every card, it's to play the winning ones. And a trader's greatest asset is his or her patience. Without it, every other tool is useless. The less you do, provided you act when it matters. The less you do, the better you do, provided you act when it matters. When the setup comes, you have to be ready to strike. The setups will come. They always do. But the question is, will you have money in hand or will you have used your ammo? So that to me just sums it all up perfectly. What January is showing. January is showing that this is the month of patience, at least the first week so far. And I got a hunch that the rest of January will likely be similar. And is in my experience, as it moves into February and especially March, it'll start to get much more probable. So I guess that wraps up this episode, this backtesting session. And yeah, super interesting stuff. And I'm really curious, really excited to finish up January. I feel like I'm learning so much, and it's answering so many questions for me. I hope if you've watched this, you're watching this, and the few people that would have made it to the end of this video, hope you're gleaning something out of it, and I encourage you to do something similar for yourself. And I'll see you in the next one.